All right, welcome to The Explainer. Today, we're going to break down a really popular trading strategy, one that's all about catching and riding those big market trends. Let's dive right in.
It's a question I'm sure you've asked yourself. How do they do it? How do they seem to get on board these huge moves? Well, the answer usually isn't about some secret crystal ball. It's about understanding a force called momentum and having a solid system to trade it.
And that right there is the core idea. We're not trying to predict the future here. We're just identifying a huge wave of market feeling, that classic herd mentality, and figuring out how to ride it for as long as we can before it crashes.
So let's get into it. What exactly is momentum trading at its heart? And maybe more importantly, how is it different from the other ways people try to trade?
Well, think of it like this. You know that old saying, an object in motion tends to stay in motion? That's basically momentum trading. Instead of betting that prices are going to snap back to some average, you're betting that the trend is going to keep on going. You're trying to join the party, not stand in front of it. And this chart really lays it all out, doesn't it? It's a totally different mindset. Most of us are taught to buy low, sell high. But with momentum, you're doing the opposite. You're confirming that a trend is strong, buying high, and then trying to sell even higher as more and more people pile in. Okay, so if you're going to ride these powerful waves, you can't just paddle out there with your bare hands. You need the right gear. So let's assemble our toolkit for this strategy. It's really built on 3 key indicators that all have to work together.
First up, we've got our trend guides, 2 exponential moving averages, or EMAs. We'll use a 50 period and a 200 period. Just think of these as really smooth price lines that tell us the general direction of things. They're like looking at a map to see which way the river is flowing long term.
Okay, next up is our engine room, the MACD. Now, the MACD doesn't just care about direction. It cares about the force behind the move. It basically tells us if the short-term energy or momentum is speeding up in the same direction as our main trend. This is what tells us the wave is building.
And the last piece of our toolkit is the ADX. This one is absolutely crucial. It acts like a strength meter. It answers a simple question. Is this trend actually strong, or is it just weak, choppy noise that's going to trick us into a bad trade? The ADX gives us that final quality check. And here's where it all clicks into place. You see how they work together? It's like a system of checks and balances. The EMAs tell us the overall story, the MACD signals that something is happening right now, and the ADX confirms that it's a story worth paying attention to. You absolutely need all 3 to line up. All right, let's get into the nitty-gritty. This is where we take all that theory and turn it into a precise, step-by-step action plan. This is how you actually find your entry point. Now, I want you to look at this as a checklist, not a suggestion box. Every single one of these 5 conditions has to be ticked off, no exceptions. So you start big picture on the daily chart. Then you zoom into the 4-hour for your signal. The MACD crossover and that expanding histogram tell you momentum's building. The ADX over 25 confirms the trend has real power. And finally, that strong candle close is your trigger. That's your green light to go. Okay, so you're in the trade. Fantastic. But knowing when to enter is, believe it or not, only half the job. Knowing when to get out is what protects your money, and just as important, it's what locks in your wins. So what's our main signal to get out? Well, it's really simple and mechanical, which is what we want. It's just the opposite of our entry signal. When that MACD line crosses back against our trade, that's our cue. That's the sign that the momentum wave is starting to break, and it's time to get out of the water. But your exit plan is more than just one signal. It has to be dynamic. You start with a clear stop loss to protect yourself if you're wrong. Then, as the trade starts working, you become a risk manager. You move your stop to break even, so you can't lose. And if the wave keeps going, you trail that stop to lock in more and more profit, while still giving the trade room to run. Look, you could have the best strategy in the world, but if you don't have ironclad rules for managing risk, it's worthless. It can still blow up your account. This section is, without a doubt, the most important part of this whole system. I want you to burn this number into your brain. 1.5%. That is the absolute maximum percentage of your account you should ever risk on a single trade using this strategy. This one rule, this discipline, is what ensures that a few bad trades in a row don't knock you out of the game for good. And this really shows you that long-term trading success is all about playing good defense. You protect your capital. You stay away from huge news events. You don't put all your eggs in one basket by trading correlated pairs. You pass on trades that are too unclear, and you have the humility to pull back and trade smaller when things aren't going your way.
Now let's talk numbers for a second. When you first see a 45% win rate, you might think, is that good? But that's missing the point entirely. The real magic, the real edge of this strategy is in that reward-to-risk ratio, 2.2 to 1. That means, on average, your winning trades are more than double the size of your losing trades, and that is how you grow an account over the long haul.
So when you boil it all down, it comes back to this. This is the whole philosophy in 4 simple lines. It's about having the guts to let your winners run and the discipline to cut your losers short. It's about obsessing over your risk. And finally, it's about having the confidence to trust the process through the good trades and the bad.
And that's really the final thought I want to leave you with. Look, the best strategy in the world is only as good as the trader who's actually clicking the buttons. The rules are right here. The whole system is laid out. But the real question is, can you provide the discipline to follow those rules day in and day out? That's what makes all the difference.